In this video today, we're going to talk about the chart of accounts. I'm going to show you where you can find the chart of accounts in QuickBooks Online. And then when we get into the chart of accounts, I'm going to give you a little bit more information about it. All right. So let's find the chart of accounts. So basically what you do, you go to the gear icon up here to find the chart of accounts. It's here, or so you can go here and add it as a bookmark, chart of accounts. So then it's always there for you to select whenever you come in QuickBooks. Or you can go to All Apps, Accounting, and then go down to Chart of Accounts and select it there. The final way that you can also do it, you can search for the Chart of Accounts in this search bar up here. Anyhow, we're inside of the Chart of Accounts. So the Chart of Accounts is all like a whole set of accounts. And these accounts basically is the foundation of your bookkeeping. This is where the action happens. Anything that comes into your business or goes out to your business is recorded in these accounts. So basically, these accounts, and why I say that these are the foundation of your business, these accounts is what makes up your financial statements. So some of these accounts will go on your profit and loss, and some of these accounts are what you will call your, when other than profit and loss, you might call it the income statement. And some of these accounts will also go on your balance sheet, right? But we'll go through, I'll show you the profit and loss, I'll show you the balance sheet later on in the video. So now we're going to go through the 5 different account types that you get within your chart of accounts, right? And the 5 different account types are assets, liabilities, equity, income, and expenses. We're going to go through them one by one. Let's start with assets. So an asset account is something that the business owns. For example, your bank account is an asset. And that is your checking and your savings account, not your credit card. Your credit card is a liability account, because the difference between those two, your checking account and your savings account, you own those. Your credit card, the bank owns that, and any money you use on your credit card, you have to pay back the bank, so it's a liability. Asset accounts also too will be like, if the business owns a vehicle, for example, you can see that this business owns a truck. And if it is like you own the building that your business is in, and if you own the computers that your business uses, maybe your admin staff uses or whatever, those are assets within your business. And obviously those are things that your business owns. Now let's go on and talk about the liability accounts. Liabilities are what your business owes. So a liability, for example, would be a credit card, a loan, anything that your business owes. So it does not belong to the business owes for it. It is a liability, right? So it'd be credit card, loans, those types of things. Now let's talk about equity. I call this part in simple terms. When I think of equity, I think of the owner. Equity, like for example, like you see opening balance equity. Opening balance means the only money that will go into opening balance is when you first start the business. And this will be a journal entry, by the way. You start the business, you put money into the business, you invest money in the business, that will go into your opening balance. That's the amount of money that you give the business to start, right? And then when you are doing like your day-to-day transactions, like, you know, for example, let's say you go to a restaurant with your family, and oh shoot, you forgot your personal card home. And I don't know why you would do this. I always hint of don't do it, but anyhow, things happen, and you have your business credit card and you use your business credit card for it, so that will go as owner's distribution, because owner's drawings, right? And then if you take money, let's say that you wanted to give the business money so it can pay for the credit card or something, because the business is low on funds, and you have it in your personal account, it's not in your business bank account, it will be considered an owner's contribution. Now, let's talk about the income. Right. So income is basically like your sales, your revenue, like when you provide services to your customers or whatever, all of those bring income into your business. All right, so income is money coming into the business, and expenses is money going out of your business. So, like you pay for gas, you pay for subscriptions, you pay for insurance, all these different expenses that you have going on. That's money going out of the business. And all five of these accounts that I just went through, you will see income and expenses on the profit and loss statement, and you will see assets, liability, and equity on the balance sheet. So that's why these are all important, because as much as you use these in your day-to-day transactions, you also find them in your financial statements at month end or year end, but they are in your financial statements. Now, before we go into the financial statements, let me do a simple transaction so that you can see what I'm talking about. So we are going to go to all apps, accounting, and go to bank transactions. If bank transactions is something that you use on a regular basis, I advise please put it in bookmarks. Let's go in here. All right. So we are going to pretend that this a rental is something that I rented for my personal use. It was not for the business. I accidentally used my business credit card, which I didn't mean to. It's the only way. Anyhow, and so now I come in here, I put it under the vendor, and then the account I would choose is owner's distribution because I'm taking out from the business. All right. So I will click add. So that now has been categorized, and once something has been categorized, what happens is it will show up in your financial statement. So we're going to go over to reports, and it went on standard reports one time. So you go to reports, standard reports, and you come into here. Now let's check out the balance sheet first. So for the balance sheet, like I said, let's do all, should we do all dates just in case? All dates. Accrual. So remember I told you for your chart of accounts, you see you have your assets here, you have your liabilities here, liabilities and equity. So liabilities are there, then you have your equity accounts. And as you see, these are all the accounts that you would have seen in your chart of accounts. Now, this is why it's vitally important to make sure you organize your chart of accounts correctly, because you don't want to see an equity account and an asset account. So owner's draw should never be up here. So you want to make sure that whenever you're creating your accounts that you put them in the right type, right account type that it's supposed to be in. And if you have any questions, definitely put a comment under the video about any specific accounts that you want to create and you're not sure. Anyhow, so let me go into this owner's distribution so that you can see the transaction that I categorize and put in here. And there it is. Anyhow, so that's the A rental for the $800. It's in there, and that's how it shows up on your balance sheet. Now let's go to your profit and loss now so that you can see that in your profit and loss you will have, let's do all dates again, an accrual. So you will have all your income accounts here, and you will also have your expenses accounts here at the bottom. All right. And the one thing that both of these accounts must match with is their net income. This amount down here has to match the amount inside of your balance sheet as well. But we're not going to go through that today. That's just something I wanted to mention there. Go back to this beautiful chart of accounts. So tips, there are a few tips I want to give you before I end this video. When you are now starting out in QuickBooks Online, QuickBooks gives you so many accounts when you are now starting. So when you create your company and you come in QuickBooks, you see like all these accounts and you're like, oh my God, I'm not going to use all these. that is fine. What you can do to clear these up is come down to the last one. I always work my way from the bottom and go up. So I will go to this down arrow out here and then click make inactive. Now, once I confirm to make inactive, QuickBooks will remove it from the list, and I can always add that back. If I ever want to add back an account that I made inactive because I realized I deleted that account, but I could actually use it now, you can go to this settings here and include inactive accounts. Okay? And the other tip that I wanted to give you as well is make sure that you keep the names clear in your chart of accounts. You know, you don't need to put a lot of description for the names. Just keep the names clear and simple. You know, for example, MasterCard will be MasterCard, Visa will be Visa, checking account. You just make it clear, okay? And also make sure that you organize your income together, your expenses together. So you want to make sure that when you are organizing your chart of accounts, that these like all fixed assets are together and your liability accounts are together, your equity accounts are together. You know, like you see how it's uniform here. You want to make sure that they're all together, because then when you go into this, all this affects how it shows up in your financial statements. If you ever want to, you know, rearrange the order in here, you can turn on account numbers, which I personally like to use accounting numbers, but that's completely up to you. And the final thing I'll tell you is only add accounts when needed. So don't say, oh, I think I use this and I think I use that. Only add the accounts as needed. So as you go through your bank feed and you're adding and you're categorizing transactions into accounts, you only create new accounts when you need them. Okay? Now, before I go, I'm also going to show you how you can create an account in the chart of accounts. If you want to create a new account, you can come up here, click new account. You put in the account name, you choose the account type, and when you choose the account type, like let's say it was a income account, they'll give you like you can choose if it's a service account or whatever, but you choose the account type there, right? You can put in a description if you want, and so on and so forth. The next way that you can also create a chart of accounts account is in the bank transactions, and you select any of these. Let's select PAM. Let's say that I want to create a supplies account. I can create it here, but I want this supplies account to be a cost of goods sold. I can type here, or I can click add new, or you can just go into this box and you can just click add new there, and you'll be able to create a new chart of accounts from in there. So that's basically it. Thank you so much for watching, and I'll see you in the next video. Bye.